Good day, everybody. It's a guy here, the unknown, and today I want us to look at something very important. I want us to actually look at US30. On Friday, I took US30, and I want to go through it in lifetime to show you why I took it. Okay, I want you to see this in real time so that you can be able to identify this in real time. Because if you understand this but you can't see them on your chart, it will do you no good. Okay, so I'm gonna go through US30 and I'm gonna tell you why I took it, and I'm also gonna tell you why I didn't take Nasdaq and why I didn't take S&P 500. So I believe this is gonna shed more light. Okay, and in this video you're gonna learn how to take good patterns and which patterns to actually stay away from and which patterns to avoid. Okay, I'm gonna try to help you understand the patterns that you are able that you should take. Why? Because I've realized most people are actually taking bad patterns. Okay, bad patterns. So guys, I'm gonna show you all these things. As you already know, this is the most explosive trading strategy for indices, and one thing I love about this thing is that throughout the day you are free. You're only coming to your chart at 9:30 a.m. US time. If you're in South Africa, you're coming to your chart at 3:30 p.m. Okay, so throughout the day you are free. Okay, and once you get an opportunity, you take your 50 pips and you walk out of the screen. So this gives you freedom, and I believe trading is about freedom. Okay, if you're gonna be stick to your screen the entire day, I just believe that's stress. Okay, so guys, another thing I love about this strategy is that it's straightforward. You know exactly what you're looking for whenever you come to your chart. Okay, so first of all, these are the criteria you ought to follow. You have to identify trap volume before the session. Who is trapped? Okay, I have a lot of videos on this, but I'm gonna try to explain this today in more detail. Okay, you need to know who is trapped, because once you have trap volume, say for instance they have trapped traders below, we need to have at least 65 to 70 pips from where the evidence candle is actually being given to the point whereby if they pass, they've released all the trap traders. Why? Because most of the days they won't trap those guys. They will lead you into trap volume and then reverse. So you need to be able to know if you have enough space for 50 pips. Okay, and then again, the second criteria is to actually wait for the equity opening time. This is highly important. Okay, you wait for the equity time. We don't trade before the equity time. And if we have news later during the session, because sometimes you realize that if you're in US, we have news roughly at around 10 a.m. US time, or if you're in South Africa, you'll know that there are days when we have news around 4 p.m. So we wait for the news to actually trade. We do nothing, we just sit and watch. Okay, and then again, once the session is opened, no news, then we try to see a chart pattern. Okay, why? Because we don't even know what insiders are gonna do. We need to know what they're going to do in order to have an edge. So when they build up a chart pattern, that's when we know that they've been trading. And when they break out of that pattern, not just any breakout, the breakout must be of an evidence candle. An evidence candle is the biggest candle that breaks out and closes as a breakout. So it's important to wait for the candle to close, because if you don't wait for the candle to close, they're going to give you a lot of fake breakout which actually ends as pins, and if you take that, you'll be trapped. Okay, so that's something we try to avoid. So once you have identified chart pattern, which simply tells that insiders have been trapping, now what you need is the evidence candle. Once you see the evidence candle, the big candle that breaks out of the chart pattern, okay, I'm going to show you an evidence candle, and then once you see that, you enter and you target 50 pips. Okay, and I'm going to show you something interesting in this video. Again, you need to know what kind of pattern are you in. So I'm going to be doing this in real time and you will see all of these things. Okay, so I will show you why I didn't take Nasdaq, but first let's look at this. Okay, as you can see here, I'm using a simulator. It's actually called FX Blue. It's free. Okay, you can just search FX Blue and download it. It works on MT4 and it's or MT5. It's very good. It's very good. Okay, because you can take trades, you analyze your performance on all of sort of stuff. I've showed you how to install it in my recent video. Okay, so if you watch my recent video, you'll know everything about this. So guys, as you can see, I'm just gonna press play right here. Okay, I'm gonna press play because, as I told you, we only come to our charts when the session opens. Okay, when the session opens, so we come to our chart roughly 10 to 5 minutes before the session opens. So okay, let me just speed up these charts. Okay, because during this time we won't even be on the screen. Okay, we're only gonna come to the screen if you're in South Africa at 3:30. If you are in US, we're only gonna come to the screen at around okay, sorry, at around 9:30 a.m. Okay, so I just want to speed it up to where the session is beginning. Okay, because by the way, we're not gonna be on the screen when this is happening. Okay, so this is it's important data for us, but we won't be on the screen when all these things are happening. Okay, so I'm gonna show you why I took this one, and I'm also gonna show you why I didn't take Nasdaq and S&P 500. Okay, So guys, remember, it's about rinse and repeating, doing the same thing every day. That's trading. Trading is a business. You need to have an edge, you need to have a strategy, and you need to follow it strictly, okay? Some days you won't have trades, other people will have a lot of trades and they'll have a lot of wins or losses, but it doesn't mean you missed anything because you didn't trade on the day. Your strategy didn't show up, okay? So you need to know when not to trade and when to trade, okay? I'm going to share with you a lot of things. Okay. So on this day, let's check. Did we have news? Okay, why? Because the first question we ought to ask ourselves is, do we have news? Okay, that's the very first question we're supposed to ask ourselves. And on this day, it was the 31st of May, we had news at around 2:30. So this is actually 8:30 US time and 2:30 p.m. South African time, which simply means we didn't have any news. And by the oh, we did have news, okay? We did have news. So I don't really care about the news that come before the session. Why? Because I'm not even gonna bother myself going to the screen, okay? I'm not gonna bother myself going to the screen when we have news. I just want to come when the session opens. Remember, this is about rinsing and repeating, doing a business, understanding what you are doing, okay? So I do this same thing each and every day. Every day when I come to the charts, I'm waiting for one thing. So you can see how easy it becomes. Imagine if you do the same thing for the next 10 years. It's going to be super simple for you. The only problem is that most people are not putting this into practice. They are not backtesting, hence they are failing to understand, okay? Or people are paying attention to a lot of noise. Guys, there's a lot of noise. You need to know your strategy. You need to have a strategy and master it. And to be honest, if you can stick to one strategy, master it very well, you are going to see more profits than if you are trying to do this, that, and that, and that, okay? Because there are a lot of strategies, okay? There are a lot of strategies, and if you learn a lot of things, you're actually going to end up getting confused, getting to a point whereby you are stuck. You think trading is no longer working because you don't have a strategy that you have mastered that works for you. So guys, let me just come here. The session is opening, the news of trader, okay? We avoid the first candle. Sometimes they'll build a pattern before, however, it must complete inside. Why? Because we're not going to open a trade unless the equity is opened and there are no news left, okay? Unless if we have news later, maybe in 8 p.m. South African time, we can trade during the session because those news are coming later, okay? We won't be on the screen by the time. So now what I'm going to do, I'm going to reduce the speed a little bit, okay? I'm going to reduce the speed a little bit, okay? But I don't want it to be super slow because this video might be too long, okay? This video might be too long. Okay, now let's just try to increase it a little bit. I will show you what I took and I'll show you what. Oh, wait a minute. Our job is to identify trapped traders, okay? Trapped traders. As you can see, they went up, okay? These guys down here were trapped, but let's see what they did. They came and hit them out. You see with this candle, they hit them out, so we can't really tell who is trapped, okay? But people who are at a loss are people who are down here, okay? Let me just try to the closing price indicator. Let me try to just set this one, okay? Yeah, now you see the indicators have gone back to their place. As you can see, most of the time they're gonna trap on this line over here, okay? So they did take people up and they bought people down, and when the session is now opening, everybody who went down is at a loss, okay? So this is not clear trapping, but let's just say everybody down here is trapped, okay? Because there are people who chase these candles and the orders got fulfilled below. There are people who chase this move and they actually trapped right here before prices even go up. So let's just say these guys are trapped, but it's not the best trapping because they went up, came down, and went up again, okay? But let's just say these guys are losing right now when the markets are opening, right? So now the second thing we do, the first thing is to identify trade volume right before the session open. I'm glad the session has just opened right now. And then the second thing is actually to see if we have a possible trend, because sometimes we might be in an explosive trend, and if we are not aware of that, we might end up counter trending a strong trend, okay? But now you can see this can't be an explosive trend, because an explosive trend is actually identified through two trend lines. Maybe they trend, and then they move to this level and trap. But you can see here, this one was broken, okay? Which simply tells you that we are no longer in, we are not even in a trend, okay? And the news have traded. So the three questions: what news are there? The second question, who is trapped? The third question is, what are we in a possible trend, okay? So these guys down here are literally trapped, okay? These guys are trapped, okay? I hope I'm not confusing you. These guys are trapped down here, right? So, okay. But for most of you, I believe you already know this strategy, so it shouldn't be hard to understand these things. For those who are new, I have a lot of videos, guys. You can just watch those videos, okay? I put a lot of information, okay? So, because I have a playlist, it's like Nasdaq something. Just go and look at that one, okay? So as you can see, guys, okay, the session is now okay, this is the first candle that opens the session, okay? Let's allow it to trade. Oh, okay, let's allow it to trade. We have done 3 things so far. We have identified trap traders before the session. We have actually seen what time news are coming, and then thirdly, we have tried to identify if we are in a possible trend, okay? So we are going to the next step, which is what looking for a chart pattern, because yes, we saw who is trapped, okay? And if we're gonna be getting a pattern which gives us an opportunity to sell, we need to have roughly 65 to 70 pips before they can release these guys down here. Unfortunately, we don't have a pattern right now, okay? But if maybe there was a pattern that gave us an entry here, we need to have roughly 65 to 75 pips over here. Why? Because most of the days they're not gonna release these guys, okay? So it's important to know the all the 3 possibilities, okay? I've shared this with you all the time. Let's say if they give you an opportunity to sell okay, fine. Let's say they're giving you an opportunity to sell, they might just bring you into trap volume and reverse. So that's something we want to be well aware of, okay? And sometimes, of course, they will just come and do something like this. Wait, they'll just come and do something like this and just stop hunt these guys enough to take everybody who bought out, and that's when they might reverse. So this is the second scenario that we have to account for, okay? And then the third scenario is whereby they'll lead you down and end up trending down, okay? So we need to be safe. If they are not going to release them, we need to know that, okay, at least we have enough space for our 50 pips, because sometimes you'll take a trade down and think that's the main move, and then when you maybe you step out, you go to the mall or somewhere, when you come back you realize they've closed you. They came down maybe 80 pips and then they came back for you. So that's something you want to try to avoid, okay? So I believe you understand by that. And now the session has begun. Our job now is to do what? Our job now is to, okay, we identify trap volume below. Yes, we have enough space because we have 100 and something pips, and we waited for the equity to open. Now we need a chart pattern. A chart pattern is going to tell us what the insiders are doing, because we don't move the prices, insiders move the prices. So we need to know what they are busy with, and the only way we can know what they are busy with is when we have a chart pattern, okay? And then from a chart pattern we're going to wait for an evidence candle. That's a big candle that breaks out, okay? And that's when we're going to take it if it's given, okay? So guys, let's just pay close attention to prices. I'm sorry, this video might be a little bit long because I want to take you through the trade I actually took. And one mistake people make when they are back testing is they just speed up the charts to where they want or what they want to see without feeling the need of patience. Guys, trading is about patience, and if I am to be honest with you, you must feel the pain of sitting in front of your screen when you are backtesting. Why? Because when you come to real charts, you are gonna have to sit. Sometimes you'll sit 3 hours in front of your screen just watching without getting an opportunity. So if you're not used to that, you're mostly gonna feel tired, okay? And you might end up forcing trades that are not there. Why? Because market makers are gonna use time against you. They know you get tired. They know you don't have the ability to sit long extended hours in front of your screen, okay? You're gonna get like some people will have some back pain, some people will have like they will just have impatience and they will end up forcing trades. So market makers will use time against you. That's one thing you need to know. So even when you're backtesting, you must teach yourself to have that patience, okay? So far there is no chart pattern. All we have is the high. This is the high, okay? This is the high that was made today, and this is the low that was made today. So we will try to track every important key level, okay? However, we know that the closing price of the previous day is a very important key level, okay? Sorry guys, I'm saying a lot of things, okay? I'm saying a lot of things, mainly because you can't understand trading in 1 hour. You can't understand trading in 10 minutes. So when I'm explaining, I try to share with you most of the important things, even though I know I won't be able to share with you everything in one video, okay? So guys, please just bear with me, okay? Bear with me, okay? Let me delete this one. So now, do you have a chart pattern? No. Okay, the session opened here. Okay, this is the candle that opened the session. So we don't trade until the session is opened, and we have no news in the session, so we are just free. It's a free go. Okay, and another thing you need to know, okay, are they giving a pattern? There's no pattern. You see, they just went up and now they just collapsed down. Okay, so let's keep on waiting. But one thing I can tell you for now is like we need like times. This is half past, as you can see. This is the o'clock. We're gonna identify or separate our times. Why? Because I told you good trades are gonna come at a specific time. Okay, so they come 10 minutes to or before or after, 10 minutes before or after the half hour mark, or 30 minutes before, 10 minutes before or after the o'clock mark. Okay, so it's always 10 minutes before or 10 minutes after, or exactly at the times. Okay, so you need to know if it's half past, we might get a trade right 10 minutes before or 10 minutes after, but that's when the session is open. If we are coming to o'clock, we might get the trade 10 minutes before or 10 minutes after. Okay, so this helps you also filter out bad trades, because now you are using time to your advantage. Okay, so let me just identify these important times. Okay, as they are just trading, you see prices are moving. I'm just trying to spot the most important thing, and I'm also teaching you how to backtest. Okay, and this tool is free, so if you are serious about the business, you'll go and get this tool. It's called FX Blue. Okay, FX Blue, I'll put the link in the description. It's FX Blue. Okay, simulator. It's a free tool. It's a free tool, guys. It's a free tool. Okay, it's a free tool. It's a free tool. Anybody can have access to it. Okay, so yes, now you see if they're giving a good trade, it's gonna be close to these times, 10 minutes before or 10 minutes after. Now let me change the color of this. Sorry guys, I'm explaining a lot of things. Okay, and I'm just trying to show you a trade I took on Friday and why I took it. So guys, if you are patient, you will actually eat a lot from the market. Okay, remember what Bill Lipshu said, remember what Bill Gates said. Not Bill Gates, Warren Buffett. Warren Buffett actually said that markets are devices which are used to shift wealth from impatient people and give it to the patient people. So if you're gonna try to force a trade, you're gonna actually lose a lot. And one important thing I can tell you is that do not force a trade. Okay, don't try to force a pattern. A pattern must happen on itself without you trying to tamper with it. Okay, because sometimes we draw lines and we try to force it. This must be a pattern. Remember, it's not, the results are not going to come from you forcing the pattern. The results are going to come from how clean the pattern is. Okay, so I'm trying to show you how to take the best patterns here. Okay, so the pattern is not gonna, the results are not gonna come from you actually, sorry, they are not gonna come from you actually forcing the trade. They're actually gonna come from the pattern being perfect. Okay, when market makers are done trapping, they are gonna give a good pattern. So cease from trying to force the pattern, because every time you force the pattern, you're gonna see what you want to see. But as long as the pattern is not clean and the market makers are not done and there is no evidence candle, that trade is not gonna go. Okay, and when they are ready to go, they will go. Don't force prices to go. When they are ready to go, they will go. Just be there. Okay, just be there. That's your job. Okay, so guys, I saw all these things happening. Okay, as you can see, they're just trending down, trending down, trending down. They broke this low. So one thing we're gonna do is we actually gonna move this low. Okay, because we are trying to find strong levels. Okay, okay, yeah, so this is the new low. So let me just reduce this level, because now we are trying to track the strong level. So the high is still intact. Okay, the high is still intact. Now we have you see, this is what we have so far. This is what we have. So I can just pull it as far as I want, because now there's no information from it. Okay, the only information is that this is the low that they've made. Okay, and then another thing I know, or another thing I see, is that okay, I can move that intact high now. Why? Because this high is intact. So now I'm taking the bodies of this candle here. Okay, so please pay close attention to what I'm taking. I'm taking this body and I'm putting it here. Why? Because this is where they made a high. Okay, so I'm just taking the recent high and the recent low, nothing special. Recent high, recent low, because this is where they keep touching and repeating, if you can see. So this means this might be a strong resistance. Okay, yes, we don't trade support and resistance. Okay, we trade chart patterns. Okay, so guys, I'm gonna try to be quiet, but there's a lot of things I have to explain. Okay. Okay, and then okay, obviously here they have touch, but it's only one touch, so I'm not gonna say it's a touch, because so far we see it's one touch. Okay, and sorry guys, I don't want to speed the charts, because you must feel the patience. If you don't feel the patience, you'll never be a good trader. I'm telling you why. Because when you come to the charts, you're gonna be quick. You're gonna want to something that happens quick, in and out. If they go 1 hour without giving you something, let's say for instance, look at this. This is where people usually go wrong. And I know if you're still starting, it's gonna affect you. You see, they went roughly 180 pips, but they never gave you a pattern. So this is none of your business. Okay, they can go 1,000 pips. If you don't have a pattern, you don't have an opportunity. If you are using this strategy, if you have other strategies, it's okay, you can take the trade. Okay, because if you are using the strategy and you're gonna end up taking this and this and that does not align with the strategy, then you won't be able to know your win rate. And again, when you struggle, honestly, you can't actually fix the mistakes, because you won't be able to account for them. You won't even understand why you took this trade, why you took that one. Okay, so if you want to last long in the business, you really have to learn, and you really have to back test, and that's when you're going to start understanding these patterns. Okay, because almost every day you are going to get a pattern. Okay, so guys, just be patient. Please, please, please be patient, because if you're not patient, you're going to chase moves. You're going to actually be a trader who tries to catch moves, and that's not something we are doing. I don't care about the moves. Okay, because when you start focusing on the moves, you're gonna take more bad moves, because you can't account for them. You don't even know why you are taking them. Okay, and simply don't do something because somebody is doing something. You might lose a lot, and I'm gonna show you why I didn't take Nasdaq and S&P 500. Okay, so just bear with me. So what you can see now is that, okay, they are building a pattern. They are now building a pattern. Okay, they're building a pattern. So let's just be patient. If you're impatient, the video is bothering you, you can just speed up the speed. Okay, it's okay. But what I want you to understand, but remember, if this is a business, you really have to put in the work, because if you are learning to become maybe a teacher or learning to become some professional, you have to put the word, you have to read, and you have to go through the tertiary program. If it says it's 3 years, you have to use the whole 3 years. You can't say, oh, I want to learn all the modules in 1 year. No. So if you give your professional career much respect like that, this is harder than professional careers, because with professional careers, mostly it's about finding something that's already there, making decisions based on what is provided for you. Okay, because you have a job description, you already know what to do, because everything is there, the formula is there. But when you come to the market, you must make your own decisions. Okay, so it makes it harder. So please try to be patient and put in the amount of work required. Okay, I told you I backtest every day. Okay, so guys, please, if you are impatient and you want to come and make profits without really being willing to put in the work, I wish you all the best. Okay, I wish you all the best. Come talk to me in the next 3 years. Okay, tell me how profitable you are. If you are expecting the markets to give you something for nothing, come the next 3 years, we will talk. Okay, the same applies to if you don't know what you are doing to the market, you are chasing moves, I can guarantee you in the next 3 years you'll still be searching for strategies. Okay, but once you have a strategy with a good win rate, you rinse and repeat. Yes, you'll take losses here or there. There's no strategy without a loss. Even George Soros does take a loss. Okay, but you need to take good losses. Like, you need to follow all your rules. If you lose that trade, it's okay, it's a good loss. But if you lose a trade whereby you didn't follow all the rules, that's a bad loss and you can't account for. Okay, so guys, I'm sorry, I'm just explaining a lot of things, so let me just calm down a little bit. As you can see now, they are playing inside. When they are playing inside, just try to relax. Okay, just try to relax, because if you're not relaxed, What you're gonna end up doing is, let me show you, you're gonna see this. Okay, let's see. Okay, you're gonna see actually a lot of patterns. You're gonna see a lot of patterns. Okay, fine, let me just delete this. But if you don't if you don't relax when you are inside here, you're gonna see a lot of patterns. Let me show you. Okay, the pattern that I see so far, which was invalidated. Okay, because every time something builds up, I want to follow that something. Okay, I saw a head and shoulder. Remember, this is a trade I took on Friday. I saw a head and shoulder here. Okay, and it wasn't invalidated. It wasn't invalidated. It wasn't invalidated. Hence, I'm saying today we're gonna actually learn how to take good patterns. You saw, I saw a head and shoulder, and for this head and shoulder to be invalidated, they will have to break they'll have to break this line. Okay, so they didn't break this line. Okay, they didn't break this line. So this was valid until they started consolidating. So when they start consolidating again, it becomes an issue for me. So I can just remove this head and shoulder, because now they're telling you that they're building something bigger. Okay, and guys, if you see a pattern that takes, you see now we are in a rectangle. Okay, this rectangle has taken 61 minutes. Okay, we can say it has taken 1 hour. So if you see a pattern, mostly a rectangle, that takes roughly 1 hour 30 minutes or 2 hours to build, you can target 100 pips from that move. Okay, why? Because there's a big move that's going to come out. Whenever you see a pattern that takes many hours to build, the move that's going to emerge from that is going to be very big. Okay, that's why most of the time when we have non-farm, you realize that they can hold the level the entire day. When you see, okay, there's something we have to talk about. Okay, fine. Okay, fine. Let me stop here. So guys, when you see a pattern that takes roughly 1 hour 30 minutes to 2 hours or more to build, believe me, that's a preparation for a big move. So the trade that's going to come out of that is going to be good. It's going to be big. So you can actually target 100 pips from that move. Okay, that's what I'm telling you. I didn't want to tell you these things. Why? Because I wanted you to go and backtest and see these things on yourself. Because guys, you will never learn or you'll never be best by just seeing what somebody is doing. You'll have to go to the charts and put in the work. Do it for yourself. Test it for yourself. See what works for you. Okay, see what works for you, because in backtesting you might discover that, oh, this works for me well. Okay, but if you don't go and backtest, you're actually robbing yourself. Okay, so please, everything I show you, go back to your charts and backtest. I'm telling you, this tool is free. Go and download it. Select a date that you want to select, okay, and backtest. Backtest like this. You don't need to know the results that happened on the day, because when you're backtesting, you can just choose a random day, then backtest it. Okay, because there won't be data on that day. Backtest it in real time. Just speed everything up, but once the session starts, lower the speed as much as you can and follow each and every move. Okay, each and every move up until where you get all this criteria is fully met. So you see, somebody would have seen this as a breakout. Guys, this is not a breakout. You see, this is not an engulfing candle. I told you, I'm not talking about just a breakout candle. No, I'm talking about an evidence candle. Okay, I'm talking about an evidence candle. And let me show you something here that I just put here. If you look, okay, this is the playbook. I have it in the description. Okay, this playbook has all the patterns you should be looking for. I tried to put everything in the form of a book, even though everything is explained in my previous videos. If you go to my previous videos, you'll find all this information. Okay, but I tried to put everything in a book. And when I was drawing a head and shoulder pattern, please pay close attention to this. When I was drawing a head and shoulder pattern, realize here I didn't just continue with my line. There's a reason I actually had to find a candle like this. You see, this is an evidence candle, the big candle that breaks out. Okay, mostly it's preferable when it starts from the inside and it breaks out as a big candle. Okay, it's gonna be bigger than most of the candles that builds the pattern. You see, even here I used a big candle. Why? Because the evidence candle has to be a big candle. It's not just a small candle. Okay, so all the patterns you need, I put them in this book. Go and master this pattern. Guys, you are not reading this book and you are not mastering it, or else you are looking at 5 strategies at the same time. Give yourself time to focus on one thing. Even if it's not the strategy, find the strategy, focus on that. Take roughly the whole 6 months just studying one strategy. See if that won't work for you. But as long as you are trying to understand multiple strategies, you want to understand this, that, no, you are not gonna be consistent. Okay, it's going to take you time to be consistent. Okay, and you must spend 5 years still learning and learning. But the moment you decide to focus on one, only one, guys, one, you don't need many, one, even if it's giving you two beautiful opportunities a week, it's more than enough. Okay, focus on one. Okay, so I put everything here, and that's why I'm showing you this, because it's not just any breakout candle, it has to be the big engulfing candle. Okay, so I believe you've seen this, and I believe now we know, because we spend most of the time debating about the evidence candle. Okay, so this is not the evidence candle. You see, if for it to be an evidence candle, now you have to like force it. Guys, don't force things. Okay, if it's not there, it's not there. If it's not clean, it's not there. Okay, if it's not clean, it's not there. Now let's see. Okay, they started hitting this line here. Okay, now we have two lines. This one they've hit it once. Okay, this one they've hit it once, and they are constantly hitting these lines. Okay, so we'll keep all these lines to see, because they can still come and hit this line. Okay, so guys, let's proceed. I wanted to show you the evidence candle. Okay, because that's something we keep fighting about. People are entering prematurely, people are chasing moves, people don't understand the evidence candle. Okay, so guys, please pay close attention to that. Okay, so let's proceed. We are waiting. Okay, so if you got this far, wow. Okay, because I know most people will try to, oh no, this is waste of time. It's not going to be waste of time when you come to your chart and realize that your chart is running so slow, and now you have to wait, and you start seeing patterns that are not even there. Okay, so guys, I plead with you. I'm going to show you how to filter out bad patterns, okay, in a minute. I plead with you, wait for the opportunity. If they go the whole day and they don't give you an opportunity, it's okay. There's still tomorrow. Okay, you don't have to waste your account, take some things that are not good just because now you think, whoa. No. Okay, don't do that. You saw how big this candle was as it was going up. It just closed back inside. So if you are just trying to anticipate a move, you're gonna end up taking it. Do not anticipate a move. Wait. The evidence candle must be visible. Just wait. Okay, so for me, I was waiting. At this time, I had no trade. Okay, I had no trade, and this was in mind you, 1 hour. This was 2 hours. Imagine sitting 2 hours and you don't have a single trade. You feel like, oh no, today I'm wasting time, today I'm feeling tired, this, that, and that. Oh, they're just not working, they're just not doing it. Okay, no, we don't need that. And then you end up taking trades like this. So guys, please try to be super patient. Okay, they are inside a rectangle. When they're inside a rectangle here, you need a pattern that has 3 touches. So make sure the pattern you are trading has at least 3 touches, not 2 touches, but 3 touches. Okay, make sure of that. Okay, okay, please at least have 3 touches. Okay. Oh, now let me stop this. This is what gets interesting. You see, people will be chasing this candle. Is this an evidence candle? Okay, let's see if it's an evidence candle. Okay, we have this pin that came up to here. You can see still this candle is still within this one. Okay, it's still within this one. And the second thing about this candle, it's that it has like some selling pressure above. You see, when it's like this with a lot of selling pressure above, preferably wait for the next one to see what happens. Okay, because this selling pressure is information. Okay, it's information, and we do not want to find ourselves trying to fight against what the market is telling us. Okay, so please pay close attention to this. Okay, pay close attention to this. Okay, let me just continue now. You need a candle that's so clean. You see, there is selling pressure above, and again, when I pull this line to the next bodies, because you see here, oh sorry, let me do this. When I pull this line to this body now, you can see there's a touch, almost a touch, and these are the recent bodies we had. This is the recent week we had. So when I pull the prices or adjust the price level to this level here, you can now see this is not an evidence candle, right? So guys, let's just be patient. Okay, don't force things. Okay, don't force things. The problem is people are impatient. People want to find things quick. So you stood on your charts 2 hours, you found nothing. Now when you see this, you are no longer thinking. You have to take it. This is the evidence candle. No, you lose. You come and complain. Okay, you see now. Okay, yes, you'll see this pattern, but they are in a tight rectangle. They are in a tight rectangle. When they are in a tight rectangle like this, there's no need for you to force patterns inside the rectangle. Just be patient, okay? Just be patient, okay? So we are trying to filter out trades that are not clean. Besides, if you are drawing this line here and forcing a right angle triangle, what about this touches behind here? What about this? If this is a right angle triangle, it must actually start from roughly the same place. You see this line, it started here. Even the top line must start roughly here. So if you're gonna move this one, which you can see it's a clean rectangle, and now you put it here. Okay, let's say if you're gonna do something like this, now you want to do something like this so that it favors you. Can't you see that you are forcing things, and now you are forcing the market to give you what you want? What about the rectangle? What about the main rectangle? What do you say about it? What what do you think about the main rectangle? Okay, now you are forcing this pattern. What about this rectangle that they took such a long time building? They took almost hours building this rectangle. You can't just ignore it as if it doesn't exist. Okay, so guys, when you see a tight rectangle, it's not like when you have a rectangle above here and you have a rectangle down here. This is a tight rectangle. Okay, so you have to be patient and you have to wait for the prices to break out of the rectangle, not just the small pattern that you draw. Okay, so please be patient, okay, because you are more likely gonna see a lot of pattern. But if you are inside a tight rectangle like this, it wouldn't kill just to wait for the rectangle to close. Okay, so guys, okay, fine, the video is 36 minutes. Okay, I'm worried about the length of the video though, but I have to do this. Okay, I have to do this. Okay, so as you can see, let's see what's happening. Okay, they're just consolidating. No need for you to panic, to cry about trades, to force trades, force this and that. No, you can see I just moved this line to the to the body of this. Still, again, it's still the body is here, so you can still see this line is still strong. Okay, so let's see if they're gonna give us something clean. Okay, but until they give us something clean, we are not trading. Okay, yes, it is okay to draw a line inside here, but remember we are still in a big rectangle. Okay, there are orders below, there are orders above. They are still trapping, and we're not gonna trade until we know what they're doing. Okay, because if you have something like this, I'll show you because this is a trade I took on Friday, so I already know where I took it. Okay, so I'm showing you things that will help you, things that will work for you. So if you see a pattern like this, remember we are still inside a big rectangle. So what I usually do when I see a tight rectangle like this, I'll just put some text here and say avoid zone. Sorry, okay, avoid zone. Okay, and remember we're still gonna look at how to avoid bad patterns. Okay, so guys, you see, I call this the avoid zone. Why? Because we are still in a tight, this is not just a rectangle, it's a very tight rectangle. Okay, so this is what I call the avoid zone. Okay, avoid taking any trades in a zone like this, because if you do that here, you're gonna pay the price. Okay, sorry, you're gonna pay the price if you do that. You see, this is the avoid zone. Okay, I can put it yellow. Now you see they broke out with a huge engulfing candle. Okay, they broke out of this with a huge engulfing candle. Is this your trade? We are still inside a rectangle. Stop trying to force patterns when we are in a tight rectangle. There's a reason these guys are playing inside this rectangle. Okay, and if you see this as your pattern, right angle triangle, now it seems like it's forcing things. Okay, for you to see that, it has to be a very big rectangle, like a big rectangle, not just a tight rectangle. And again, we are almost at trapped volume. Remember we talked about this as being trapped volume, and we talked about some days they are not going to be released. So if you get an opportunity, you must be aware that if they are sending you into trap volume, why? Ask yourself why they're sending you into trap volume. So you need to have, if maybe they were giving you a sell opportunity, you need to have a roughly 60 to 70 pips before these guys can be released, because most of the days they're not gonna be released. Okay, even if you look on Thursday, take Nasdaq, S&P and USDT, you find that only is it S&P that released them? I think it's S&P. Nasdaq, I think Nasdaq didn't go that deep to release them. You can check Thursday Aussie on your chart, guys. You'll see that. Okay, this is the avoid zone. Okay, so this is too tight, guys. Honestly, this is too tight. The rectangle is too small and it's too tight. So guys, you can try to avoid that. Okay, now you see they're touching this line, they're touching this line, they're touching this line. So now this line hasn't been touched. You can replace it for now. Okay, you can remove it, but you must note this level, because sometimes they'll break out of this here and then not surpass this one. So you just have to be aware, okay, because things like that will happen. They might break this pattern but not surpass this one. So if you're gonna take a sell, you'll realize that now or they haven't released these guys here, or they just came to stop hunt them, then they reverse. So these are the small things that you have to actually try to pay close attention to. Okay, it's important, guys. It's important. It's really important. Okay, sorry. Okay, for me, when it reaches this time here, I'll close my charts. Okay, but on Friday, I didn't close the charts. I just minimized the charts. So what I do when I minimize my charts is I have an alert somewhere here. Okay, that's an alarm. Okay, and again I have an alarm somewhere here, so that if prices are breaking out, I want to hear the alert and it will tell me that, oh, prices are breaking out. Because sometimes you'll have to step away from the screen and stuff. Okay, maybe you're doing something, and when the alert ring, that's where you can say, oh yes, the alert rang, and now this is it, and this is it. Okay, so look at what they are doing. Okay, they are still in a big rectangle. Now this rectangle has taken over 2 hours. You know what this tells you? It tells you that when you get that opportunity, go for it for more than 50 pips. Okay, so now let's just remove this line. You see, now we are in a half past point. Okay, I just moved it to see the candles. Okay, this candle was not an evidence candle on its own. Okay, because look at the size of this candle. This one was not an evidence on its own. Okay, so now you can see they're consolidating above. I told you, don't. It's not about any breakout candle, okay, that matters. It's about a breakout candle that becomes an evidence candle. Okay, so now when we do like this, you can see they're bouncing. Okay, they're bouncing. Let's wait. Okay, that's what I saw. Now they are trying to compact people. They are trying to squeeze people. This is what I love when I see a squeeze. Okay, so let's just stop it here and see. Okay, let's see. They are squeezing. They are not going high. They are not going low. Okay, let's see what happens, because I took my trade somewhere around here. Okay, and of course what I got was when I took this candle over here and took this bodies here. Okay, this is what I took. You see, I saw a right angle triangle, and you see now I'm gonna stop it when the candle closes. Okay, you see, I'll show you what I saw. Now you see, this is roughly 1 2 3 touches, 1 2 3 4 touches. Okay, I told you your pattern should be roughly 3 touches. Okay, if it doesn't have 3 touches, don't take it. If it only has 2 touches, don't take it. It's mostly gonna be a trap. If you miss it, it's okay. Okay, you need high probability trades. Okay, so okay, they broke out. I saw the candle breaking out. Okay, but this is not the one I took. Okay, let's see. Wait a minute. Oh yes, this is the candle I took. Actually, yes, it's the candle I took. Okay, yes, because the reason I took this candle is, now count how many candles this candle has engulfed, because I saw that it engulfed roughly 6 candles. 1 2 3 4 5 6. You see, it engulfed all these 6 candles. This is the candle I took. Okay, and I told you that I told you that when the move takes roughly 1 hour above, mostly when it's a rectangle, you can target 100 pips. Okay, so what I did was actually target 100 pips from here. Okay, 100 pips from here. Let me just target 100 pips. Okay, this is roughly 100 pips. Okay, 100 wasn't that far, guys. Okay, this is 100. Okay, so this is 100 pips. Why am I targeting 100 whereas I told you to target 50? It's because I'm telling you now that this was supposed to be something you found out on yourself when you're backtesting. This goes to say that most people are not really backtesting. Had you been backtesting, you would have seen this, because when you're backtesting, you backtest and take notes. You sit down and ask yourself questions, okay? That's how you're gonna be a good trader, okay? Because no one was born good, okay? No one was born good. But when you backtest, you start to see most of the things that repeat themselves over and over and over and over again, okay? And that's what converts you and makes you good, okay? So one, and then we have, okay, roughly a touch with a pin. Okay, we need multiple touches of a pattern. 3 touches, that's enough, okay? But 2 touches, that's not enough. 1, okay, they came down, it's a touch. 2, 3, 4, 5, 5, okay, 5 touches above. 1, 2, 3, 4, 5, multiple here, I can't count them, and even here. So you can see this pattern is way too strong, okay? And now they've just built another pattern. You see, now this is a pattern within patterns, and most of the time you will see this at breakouts, okay? So rather than just taking a candle like this one, no, you don't do that. You actually wait, and now when they keep pulling back, now you can see they are giving something like a creep as well. You just be patient, okay? Be patient, because they can still break to the downside. So I actually took this one and I targeted 100 pips, and these are my 100 pips, okay? So let's see what really transpired. Now I can speed it. You know why? Because the trade has been taken, and my stop losses is roughly 15 to 25 pips. So anywhere I feel comfortable, 20, I think 25 or somewhere here. So that's why I keep my stops, okay? Because remember, your risk has to be smaller. At least the lowest risk reward you need is 1:2. Okay, don't take a stop loss of 50 pips. That's craziness, okay? I'm sorry. Okay, because you can't be targeting 50 pips and then you're risking 50 pips, okay? Okay, let's wait. Okay, now it's fine. You see, this trade actually happened at what time? It happened at 52. I told you, 10 minutes before or 10 minutes after the 30-hour mark, the hour mark, okay? 10 minutes before, 10 minutes after. Within that, that's when you will get the good trade, okay? So literally this trade ended up going 500 pips. Imagine. You know why they went 500 pips? They took too long to build a pattern. When you see a long pattern like this, they've gathered a lot of orders, they've trapped a lot of people, and there's a reason they were holding the level. As I told you, market makers will always use time against you, and when they use time against you, you get like too tired, you give up, you want to come the next day, or else you take premature trades because now you are feeling emotional and you are feeling tired, okay? They're gonna use time against you. When I made this video right now, I wanted to do it in real time, hence my charts are so slow. It's because I want you to feel the patience. Remember, we are doing this together. I took this, I stood all these hours on Friday, and I'm still sitting here all this time looking at the chart with you, explaining these things to you. So you can see, guys, you can see already our target has been hit, okay? They hit our 100 pips. But what I'm trying to say is, when you are back testing, you must feel the patience, so that when you come to your charts, you actually oh sorry, I was supposed to take it with the simulator, but I didn't anyway, so sorry for that. Because when you take a trade with the simulator, you can come to results, you can come to graph reports. That's where you see your performance. So if you use this indicator to backtest maybe 20 days, you're gonna see your performance there, okay? But one thing I'll urge you, after backtesting, do this thing, okay? Take screenshots of your trade, win or loss. Go and actually journal it, okay? Do notes as you would in real trading, because this is also real trading. It's just that now you're trading history data, okay? So this will build your confidence, this will build your sharpness, this will make you understand things more, and you'll actually be different, okay? Because this is doing the same thing over time. It's doing the same thing every day, and when you actually repeat the same thing over and over again, you get to understand it more than anyone could, okay? So if you are just taking this and you want to apply it on real chart without backtesting it, then guys, you're doing a very big mistake, okay? Please go and put work in backtesting. Until you are willing to put in the work, honestly, I can tell you, it's gonna be a little bit hard for you to become consistent, okay? You might win trades, You can even win 5 days in a row without knowing what you are doing. But in the long term, the market is going to take everything it has given to you. Okay, it's going to take everything. That's how the market does. That's why when you open a brokers actually give you 3 months. They believe that in 3 months you would actually blow your account. Okay,